Good morning and welcome everyone to the Moneycontrol live stream. You're watching The Opening Bell and I'm your host Nickey Mirchandani. Happy Women's Day to all the viewers out there. Well, in terms of the markets to resume trade on a negative note after a day of pause out there. SGX Nifty futures trade in a rather gap down opening coming in for Indian equities. US stock markets have ended lower after Powell's hawkish tone, which revived recessionary fears yet again. And Asian equities have tumbled after Fed chairman fueled the concerns of larger hike at next policy meet. In terms of the FIIs and DIIs data, FIIs have bought in shares around 721 odd crore and DIIs too have bought in shares to an extent of around 757 odd crore. But with that, let us get going and discuss some stocks and strategies today with Hemen Kapadia of KR Choksey Securities. Hemen, good morning out there.
A very good morning to you, Nickey. Thank you for having me.
All right, Hemen, I'm going to start off by asking you about what do you think, given that we're looking at a gap down opening coming in for the markets. The last two sessions, of course, were we saw a positive close coming in, but no support per se coming in from the banking index. What do you make out of it, and what are the immediate levels and the strategies now that the viewers can look at for Nifty?
A couple of data points, Nickey. We moved up from the lows of almost 17,800 or so, and frankly speaking, 17,300. 17,800 traditionally has been a source of resistance and support, as the case may be. In this case, it was resistance. We had moved 500 points in a matter of few trading sessions. Frankly speaking, markets are not, the setup isn't that great that you would ride a 500 point move and then go up without consolidating. And we were at resistance levels, and couple of things also, Nickey. The bank Nifty walked into a virtual roadblock at around 41,677. That was a resistance. So we stopped in the sense we've taken a breather and we've ended slightly off its highs. And obviously today we'll see further pressure. But the architect of this 500 point move basically has been Reliance Industries, Nickey. Reliance has given a smart move from sub 2300 to 2420. Now, once again, a 120 point move. So we are taking a breather over there. So everything combined, and yes, I think with the Fed commentary, this was this thing. But we have inflation data on 14th of March. We have the Federal Reserve meeting on 22nd March. So lots of event risk. But I think yes, we've had a run up and we had a gap also. Now, once again, setup isn't conducive for a gap. So the gap in Reliance Industries as well as Nifty will get covered today. And I don't think the downside is much, but yeah, 17,613, 17,430 are support levels Nifty. Resistance comes in at 17,792 and 17,948.
And how about RIL, the immediate RSI levels for RIL?
RSI levels for RIL, we've support resistance levels for we've had 2370, excuse me, 2370 is strong support, followed by 2320, followed by 2293. Resistance comes in at around 2435. That's where the 55-day exponential moving average comes in, Nickey, and 2480. So these are resistance and support levels for RIL.
All right, what's your strategy right now on Bank Nifty, and also 3 profitable calls that you can suggest for our viewers out there?
Well, as far as the Bank Nifty is concerned, Nickey, I would stay away for a day, or we've closed at 41,350. Needless to say, the gap down should take it to 41,100. But if it comes to sub 4100, it might not happen today. It might happen in a day or two. But at 40,800 is the time where you can take a contra buy call, Nickey. You can either sell 40,000 puts, or you can buy simple pure vanilla futures as far as the Bank Nifty is concerned. And if you're looking for 3 profitable trades, I think one is where you could do something in a PFC, Power Finance Corporation. We're at 161. Assuming there is a weak opening, the market seems to suggest that closer to 154, 155, one can sell the 145 put option. So I think that should be a safe thing. The stock is in an intermediate uptrend. Setup is good. So on a decline, you can sell the put, you can make some money over there. Another stock where you can trade profitably is Coromandel International, Nikkei. Higher tops, higher bottoms, intermediate uptrend. The setup in a slightly wobbly market is hunky dory. So this quantifies as a buy or decline. We are at 934 closing. Assuming we get it at around 915, you can buy Coromandel International with a 20-point stop loss and a 40-point target as far as the Coromandel is concerned. And the other stock which looks interesting is SRF. Setup is good. The results were great, Nikki. So yes, we've gone up for 5 trading sessions in a row. Give it a small decline. We are at 2300. So around 2240 is where I would buy SRF positionally with a stop loss of 100 points and a target of 200 points. So few trading calls which I think could do well. And once again, I would not advise shorting the market after a gap down. That would be dangerous.
All right. I mean, just stay on the sidelines. In the meanwhile, we just quickly address the movers of the day. First, of course, on the list, we have to talk about Adani Group of companies, right? Because the prepayment coming to an extent of around 7,374 odd crore of the shares which have been backed financing. The payment, of course, is ahead of its latest maturity period coming in for April 2025. In terms of the pledges that have been released, Adani ports it's to an extent of around 15.5 crore shares, representing around 11.8% of the promoters' holding that shall be released. Apart from that, we are also looking at Adani Enterprises, where 3.1 crore shares representing around 4% of the promoter holding that shall be released. Transmission, of course, we are representing almost 4.5% of promoter holdings expected to be released, and Adani Green, 1.2% of the promoter holding is expected to be released. Now, do remember that last month too, the group had settled in, share-backed financing to an extent of around 9,203 crore, which means that there was a prepayment ahead of maturity, and that was for the maturity coming in for September 2024. So clearly, the group is pretty much active when it comes to the prepayment overall. After that Hindenburg report, especially, a lot of damage control has been on play ever after this. But in terms of the second counter that we'll be keeping a close eye out on will be Ajanta Pharma, where the company is going to be considering a share buyback, and that is for that there's going to be a board meeting coming in on March 10th. So do keep an eye out on this one as well. There is a report coming in for power sector from CLSA, where it says that it prefers inexpensive regulated utilities, something like an NTPC, NHPC and SGVN for that matter. That's the broader call coming in on that one. It says that a better hydro season, domestic coal stocks, 30% viability overall of the imported coal in the season. Unlike the trend which was seen in the last and the start of new capacities, especially at NTPC, should ensure energy security despite the elevated prices. So do keep an eye out on a bunch of power companies, power stocks. They're expected to be in focus in today's trades. In terms of the analyst takeaway, Grasim Industries held a meeting. Bunch of brokerages out there which have been covering and talking about it. Picked up Jefferies out there. It has maintained a buy call and the target of around 2,000 rupees per share. It says that the VSF expansion is completely in place right now. And the further expansion is in way in terms of the new business, paints for that matter, they all will be rolled out over a period of next 2 years. And also management has maintained that the paint product launch will be coming in Q4 of FY 2024. So do keep an eye out on this one. Of course, there is also a report coming in on Bajaj Auto. So clearly from Grasim, we're now shifting focus to Bajaj Auto, where Jaypee Morgan has an overweight call on this one and has a target price to an extent of 4,400 per share. Now, what it says is this company could potentially be re-rated in 2023 because the company is becoming more aggressive on the EV segment. It says that the exports seem to have bottomed out. They can see a potential recovery coming in from Q2. Margins also may see an improvement due to better overall mix. Valuation at this point of time reflect an attractive risk-reward ratio. Now, do remember there have been a couple of brokerages, especially in the last 15 days, which have kind of turned positive and optimistic overall on the auto sector, which for the last 5 years has been languishing at the bottom given their earning performance. But at this point of time, valuations seem to be clearly attractive in terms of risk-reward ratio. Jaypee Infra, that's another one on our list today. NCLT has approved a resolution plan coming in on that one. The resolution plan for Suraksha Realty and Lakshadweep Investment and Finance. These are the two resolution applicants for which the approval has come in for Jaypee Infra. So clearly, these are a bunch of names that we are going to be keeping a close eye on before the market, of course, starts. But Hemen, I'm just going to quickly come back to you and ask you about what do you make out of any of these counters, Bajaj Auto for that matter. Do you see any kind of further upside coming in on that one?
I think the sales figures came in, it sort of punctured the momentum a bit, Nicky. Currently, the outlook is, at least on the shorter term charts, is slightly negative. We've seen a downward key reversal coming on the last trading session. So if we close below 3723, 3720, I think we could lose around 50 or 70 points. So the setup isn't exactly conducive. And if you take a slightly bigger picture, for the last 2 years, frankly speaking, it's gone nowhere, Nicky. Very large range between 3100 on the downside and 4360 on the upside. But yeah, large range, but we've got nowhere.
Yeah, clearly. I mean, Bajaj Auto and bunch of companies were trading quite in traction. But Hemen, what do you make out of Adani Group of companies? They've been scaling, at least for the last 4-5 sessions. We've been seeing some amount of positive momentum, building up for these ones. What do you make out of Adani Enterprises and something like an Adani Ports, a relatively fundamentally rich bet out there? What do you make out of companies like these?
Well, okay, it's a very event-driven stock for the time being, Nicky. But one gets the feeling that, yeah, worst is over. I mean, if you look at volumes at lower levels, I mean, even if you were to look at Adani Enterprise prices, there was a huge volume on 3rd Feb when it hit a low of 1017. We saw a second huge volume coming in on 28th Feb when it hit another bottom but made a higher bottom. So frankly speaking, whether it's Adani Enterprises and Adani Ports, like you mentioned, yes, I would prefer, like you mentioned, valuation-wise, Adani Ports, and whether it's ACC or Ambuja. I think Adani Ports is the strongest of the lot as far as terms of technicals. Even something like an Ambuja, I don't think there is too much of a downside. So the way I see it on technical parameters, the worst seems over for many of the stocks. The volatility isn't expected to go away, but I think there's a round of stability. In case of a decline or a correction or a cool off, which is natural, if you look at the stocks, they've gone down sharply, they've staged a V-shaped recovery. There could be a small cool off, but I believe the bottoms should hold. And if they hold, stability will come in next and then a gradual recovery. So I'd say, at the risk of sounding a bit optimistic, time being, a bottom has been formed. I don't think you have much to lose. Yes, keeping in mind the recent rise, yes, there could be some correction in terms of prices, Nicky.
All right, a bit of fundamental anecdote coming in for Adani Ports. The stock is currently trading at 3.4 times its book value, and the promoter holding has decreased, of course, over the last quarter. Tax rate at this time also seems to be low. But on a bit of the fundamentally positive side, the company has been maintaining a healthy dividend payout. The debtors day have improved, and the median sales growth also is around 18.7% over the last 10 years that we've seen overall for the counter. But we're going to be waiting on the sidelines for the markets to open. Ahead of that, we are also going to be talking a little bit about the power stocks per se. Hemen, what do you make out of that one? Because there is a positive report coming in by CLSA even on some of these power stock companies. Any specific bet that you like within that space? And if yes, what should be the immediate levels that the viewers can be looking at?
Okay, you mentioned NTPC and SJV and Nicky. I think NTPC looks quite interesting. We formed a rounding bottom on the weekly chart. I wouldn't say a breakout, but yes, we've been in a range. And if we were to move out of this range, I think the level is 178 of the weekly. We are midweek, so we need a closing of a 178. That is the case.
All right, Hemen, I'm just going to quickly address the markets and, of course, get back to you on this one. As anticipated, Nifty is down and out, 0.4%, lost on that one, 17,630. 17,700 level is nowhere to be seen, probably, with this 70 points away right now from the crucial level, if I may so say. The losses are just getting a little more wider as we speak. If you talk about the Bank Nifty index, Sensex also, it's no different. We're looking at cuts coming in, 0.5% gone out there on that one. Bank Nifty, of course, no support was being lent on Monday, and also today is traced down and out by more than 0.5%, or close to 0.5%, beg your pardon on this one. Auto index, we're seeing losses coming in, 0.1% gone on even that one. And if you can also look at the broader index for that matter, where we understand how is the broader momentum playing out overall for all these companies, small cap index and the mid cap index, we're looking at losses coming in, 0.5% on that one. And small cap index too seems to be down and out with losses of around 0.4 odd percent. So clearly we are seeing overall a negative start coming in for the markets in tandem with the way Asian market was behaving early in the morning. In terms of the sectoral index that we have, auto index, 0.34% lost on that one. So keep metal index also, which seems to be, was showing some signs of recovery. Early in trade today is down with cuts of more than 1%. So clearly commodity pack is also taking a hit out there. FMCG index, 0.3% lost on that one. So clearly it's no sign of positive momentum at all coming in for any of these companies right now. So we are looking at the negative momentum clearly building up. If you talk about the pharma index too, we are looking at losses coming in to an extent of 0.1%. Market breadth extremely negative at this point of time. Declines to an extent of 39, advances to an extent of 11. So clearly we are looking at some amount of negative momentum building in terms of the top gainers and the top losers of Nifty 50 index, just to understand how the market has been behaving overall. We'd be able to decipher if the market breadth is now favoring in the kind of momentum that we were expecting for Adani Enterprises. If we could pull up that one. Adani Enterprises, Ultratech Cement, Bajaj Auto, these are the top gainers out there. DV's Lab and BPCL too are the top gainers on the list out there. In terms of HDFC Bank, some support coming in from the banking finally. HDFC Bank seems to be holding up right now in green, but Bank Nifty hasn't started on a really positive start out there. In terms of the losers, of course, we're looking at Hindalco, HCL Tech, Infosys, down and out in red, Tech Mahindra and Kotak Mahindra Bank, Hero Motor. So it is a bunch of auto stocks also, along with the IT basket, which isn't, and the metal, of course, which isn't doing too well. So barely Adani Enterprises probably, and the group related stocks holding up in green, but otherwise it's a sea of red coming in mostly for the markets out there. But Hemen, what do you make out of IT, auto stocks and IT stocks right now? They've been at the bottom of the pack. What do you make out of it? Do you expect the little revival that we saw in between for IT in tandem with how the global cues were to kind of reverse from now, or do you see more traction building in after the initial level of dip for these counters?
I think there could be some pressure coming in, Nickey. Like you correctly pointed out, we saw some traction in global cues. We sort of run out of steam as far as the Nifty IT index is concerned, Nickey. A lower top, lower bottom outlook seems just a bit wobbly. So I would say if you have a very shorter term view, I think IT is going to remain under pressure for the next 5 to 7 trading sessions. If you have a slightly medium term point of view, things aren't that bad. We've had a run off, so we are cooling off, but the setup seems okay. And if I take a longer term point of view, it seems like a recovery, not a rally. So it's all over the place. But currently, the short term pressure isn't going to go away in a hurry, Nickey. And Nifty IT is at 29,800 right now. Crucial support at 29,600. If that holds, that would be the first sign of stability coming. If that breaks, further pressure.
All right. I mean, also, what do you make out of these metal names? Something like a Hindalco, for that matter, Tata Steel, JSW Steel. There was a lot of hopes earlier with the China reopening that now metal pack will again go back to the levels that it probably saw in 2020. We saw some amount of traction building in for some time, but again, we're seeing that volatility now playing out with the picture not being as rosy as it was painted earlier. But within the basket, Hindalco, Tata Steel, JSW Steel, what do you make out of the three, which look better, attractive, and the immediate RSI levels for these three?
Frankly speaking, excuse me. frankly speaking, Tata
All
Steel
right,
looks to.
I mean, you just sip on some water. We'll quickly come back to you. And meanwhile, we're also going to be addressing in some of the top gainers and top losers out there and talk a little bit about maybe Ultratech Cement, which is also seemingly doing well in trade today. Maruti is doing well. Aisha Motors is doing well. So we have some amount of participation coming in clearly even from the auto counters out there. There was a little bit of a whole fundamental scenario coming in where we're looking at a little slower than expected expansion plans coming in by Adani and price hike probably now that the sector can take can now look at probably in anticipation of that we're seeing some amount of up move coming in from cement pack overall. But Hemen, I'm just going to quickly come back to you and ask you about what do you make out of maybe now in auto counters for that matter, and also Ultratech Cement, some amount of support being lended on that one?
I think I would prefer the cement counter that you spoke about, Nikki. Whether it's Ultratech, ACC, Ambuja, even something like an India Cement or a Ramco Cement. Nikki, we don't have a cement index per se, but the setup of most of these stocks, one has improved, two, they form short-term bottoms, which might convert into even medium-term bottoms. So frankly speaking, cement as a sector looks quite promising. Auto that you spoke about, I think there's a dichotomy. If you see something like a Hero Moto, Nikki, it's gone nowhere and the weakness continues. And this has been for almost like a year. We saw bounce, then sustain. Now we are coming off again. And on the other hand, you had something like Aisha making a new high. And on the other hand, you have Maruti, which is stabilizing, showing signs of relative strength, and Mahindra. So the auto pack is completely divided. Bajaj Auto is consolidating from a longer term point of view. Hero is weak. Maruti looks set for a bounce back. In fact, you can do a near term trade over here if you have a 2 week point of view. And M&M, despite sort of range bound move, is showing resilience.
All right, I mean, we were also chatting about these commodity names before we kind of, you know, uh, gyrated back our conversation to cement companies. But Tata Steel, JSW Steel, Hindalco, these were the top three losers, at least on the Nifty 50 list today. We're seeing some amount of, volatility playing out for these counters. What do you make out of it? And out of the three, which looks more favorable on the charts right now?
I think the entire metal pack has gone for a toss, Nikki. Now, coming back to you mentioned Hindalco, JSW Steel, and Tata Steel. Hindalco is the weakest of the lot. Having said that, it is clearly oversold, Nikki. So, despite weakness, I won't be surprised if there's a bounce back. JSW Steel, the charts do not look good. The long term setup has been spoiled. The weakness continues. So, I think Tata Steel looks to be the most resilient of the lot. Now, once again, it's come off from its highs, had supports, oversold. But yes, if I were to compare the three, it would be Tata Steel, which looks good from a bounce point of view. But if you are looking at from a 3 month point of view, Nikki, none of the above look good, honestly.
All right, I mean, so we'll clearly keep, the advice coming out there is stay away from the commodity back for a while. Also, with this, Hemen, thank you so much for taking out the time and speaking to us.
Mhm.
All right, let's shift our conversation now to a little more fundamental story of the day. And with that, we're being joined by Mayuresh Joshi, who's the head of Equity Research India, William O'Neill and Company. Good morning out there.
Morning, Nickey. Pleasure to be on your show.
All right, Mayuresh, I'm going to quickly chat about hotel stocks with you because in the last 15 days or so, the momentum and the commentaries coming out from the management have been clearly building in, right? We're seeing Indian hotels talking about the business being at the pre-COVID levels. We were talking about Lemon Tree and management coming out and saying that the outlook looks more upbeat. What do you make out overall out of this space, and how much do you think this momentum is pretty much temporary, or do you think actually the fundamentals are kind of aligning with the way the outlook is stacking up for all these companies?
So, for the sector as a whole, I think two things which moved in their favor, specifically in the last 4 quarters since the unlock trade began. A lot of domestic travel started happening on a robust scale. You call that revenge travel or revenge spending. But I think the kind of traction that came through, specifically in the last 3 to 4 quarters, and that is still continuing, This quarter and the next quarter is expected to be the best, being the holiday season around, and a lot of inbound foreign travelers as well. So to that aspect, I think the last financial year was fabulous for the sector as a whole. Coming out of the COVID period itself, occupancy levels had gone significantly higher. The average room rentals had gone significantly higher as well, and therefore I think kind of numbers that the stocks have posted, even in the quarter gone by, Nikkei, I think the numbers have been fabulous. Expecting the numbers to be very, very good even for the quarter to come. And obviously quarter one, which is the best quarter for the sector as a whole. But again, I think if you probably stack up numbers, if you look at how the numbers have stacked up for the last financial year, can the hotel stocks outbeat their own earnings in the next financial year to the extent of 20-25%, and therefore justify the premium valuations that these stocks are trading at? The second element in terms of their strategy itself, a lot of these hotel stocks or hotel companies are pouring into tier 2, tier 3 cities, asset light model, managing hotels, using their brand names as well for management, and therefore I think alleviating their capex plans will probably ensure that the earnings growth remains stable. So to that extent, I think the companies which are probably lesser leveraged at this point of time can still have their momentum on. But to a large extent, I think the valuation catch up in terms of whether they can outbeat their earnings in this coming financial year compared to the last will be difficult to do in that extent of 2025, and therefore having a premium multiple as well. So I think a few of these mid-cap hotel stocks can do well in terms of momentum. Stocks like a Chalet, where I think EBITDA margins are relatively high, or even Lemon Tree, their margins are way higher than 45-50% odd. Asset light model being followed, and the management expects debt or leverage to come off. So I think a few of these mid-cap hotel stocks can have some momentum, assuming this quarter, the next quarter, is still expected to be the best for the travel or the tourism industry.
All right, Mayuresh, we were, just before you joined in, we were just talking about the commodity stocks and overall how volatile they've been playing out, right? We saw first there were this resurgent hopes that now that China is reopened, we'll probably see same amount of traction building in for these counters, and probably the spreads would go back to the levels that were seen in 2021. But clearly the volatility, the picture isn't as rosy as most of the analysts around or some of the brokerages painted. What do you make out of it? And of course, between the ferrous and the non-ferrous space, I'm sure your preference is more towards the non-ferrous space, but within ferrous space, which are the names you like and how do you expect the sector to play out?
So for the ferrous space as a whole, Nickey, you're absolutely right. What happens with China becomes a key pivotal point. Yes, we are expecting a huge amount of package to come through, a lot of support to come through for the Chinese real estate, which has really been battered in the COVID wave that they had in the last couple of quarters, and the kind of defaults and run to the bank that we have seen. But no significant announcements, and kind of disappointment that you've probably seen in the index is very, very apparent. The second aspect, obviously, is that China is a huge reprocessing economy, but to a large extent, the global demand itself is expected to be extremely subdued for the better part of this financial year as well. If you hear what Lagarde had to say, the ECB chairperson, inflation is a monster. I think that was a statement that she had put out, and therefore we need to control or tame that to whatever extent it probably takes. Yesterday, Fed Chairman Powell's statements in terms of how data points are stacking up. And therefore, I think with an interest rate trajectory which is expected to go higher and faster for the developed world, demand obviously is expected to come off quite significantly. With subdued demand, the LME prices itself are expected to remain extremely soft. And to that extent, I think the realization growth that one really expects from metal companies, because of the natural economic factors, demand remaining soft, and prices coming off, but the operating leverage does not come onto their balance sheets at all. Yes, I think deleveraging has happened for most of these companies during the COVID period. But I think with these two factors playing out, I think a significant amount of leverage is not expected to get played out in terms of balance sheets. Input costs a little bit higher, inching higher because of the China factor, whether it's iron ore, coking coal. So to that extent, I think how much of price pass-throughs is possible in a soft demand environment also will weigh in terms of the EBITDA and the absolute reported EBITDA per ton as well. So expecting, I think, a couple of subdued quarters for ferrous as well as non-ferrous players, and that is expected to play out on the prices. So I think expecting softness to continue or an underperformance for the metal indexes.
All right, Mayuresh, one last question that I will squeeze in for you at this point of time. Let's talk about the cement pack overall. What do you make out of it? Because we've seen probably there's this underlying momentum building in, or the speculation that Adani's might just go slow on their expansion and price hikes might just come through. And of course, Q4 is relatively a seasonally strong period for cement companies. But from a valuation perspective, which companies look attractive, and where do you see a pocket of strength coming in for this sector overall?
So absolutely agreed. I think Q4 is expected to be extremely strong. You're coming out of the monsoon season, the kind of budgetary spends that have been put through, specifically in terms of infrastructure, road, port, highway development, rural affordable housing as well. Cement companies do remain in focus. The second element in terms of the overall capacity, Nickey, 750 million odd tons for the sector as a whole, 550 million tons in terms of utilization levels, close to around 72 odd percent. With the kind of developments that have happened, the expectation largely was that the Adanis will spend significantly in terms of capacity expansion for both Ambuja and ACC combined together. They might go a little bit slow on that one. And because of that, I think the overall dynamics of the sector as a whole should improve because of lesser capacities coming through and more utilization as demand kicks in for all government stroke private-led projects as well. So that should exceed 75, 76 odd percent, triggering in the operating leverage benefits that these companies will take. Now, even on a quarter-on-quarter basis, my own take is that what you've probably seen in terms of softening of prices and the pass-through that we've probably seen in the previous few quarters, an absolute EBITDA per ton rise should be seen specifically with input cost softening as well. With crude and crude prices coming off, freight and logistic costs should also work in favor of these companies as well. And with domestic demand and offtake expected to remain robust at this juncture, the expectations of stronger volumes playing out should reflect positively in terms of both the EBITDA per ton at this point of time. From a stack-up perspective, I think the leadership stocks is something that we always believe at in O'Neill. UltraTech probably looks very, very close to its pivot at this point of time. Capacity additions in full swing, expectations of EBITDA per ton improving quarter on quarter. And though valuation-wise, the stack-up might be a little bit heavier in terms of price when it comes to the standard deviation and compared to the other companies as well. I think it's well positioned in terms of both the geographical mix and the expectations of granular earnings growth playing out on its balance sheet. So we stick with leaders. UltraTech probably remains on the balance sheet.
All right, Mayuresh, that's a fair call coming in on that one. Well, lower freight costs anticipated along with the strong volume uptick coming in, overall positive for cement companies, overall EBITDA per ton. But Mayuresh, we'll just leave it at that. Thank you so much for taking out the time and speaking to us.
Thank you so much. Always a pleasure.
All right, with this, it's a wrap, and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. For the rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.